We are back at it again here with another video with Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. Here we are with the SPY, the S&P 500 index, still in this tight range between 367 and the recent highs of 375. Trying to get back into that channel. But today within the volatility at 12:10 p.m., our SPY bot sent out a bear indicator. And as you see there in the charts, the outflows already had crossed. The bear indicator added that extra layer of confirmation and put options went up 100% plus within an hour, guys. If you guys want to receive this clarity and edge over the charts within the volatility, check out the link down below in the description to the 42 vision indicator, getting connected to our bots, as well as becoming part of a growing community of investors using these resources to maximize in either direction, whether stocks are going up or going down within the volatility. And you can now gain access to it as well. That link is down below in the description. So here we are with the SPY, as I stated, within this range, and the question mark is it actually losing momentum here? And is it going to reject off of it and go even lower? We're going to talk about our inflow versus outflow and bull and bear indicators in today's video and what's going on in the charts. But before we do, I want to share with you guys the home run opportunities that were mentioned this morning over at the Discord. So the home run of the day was spectacular and beyond expectations. And if you guys want to know about these stocks early on in the pre-market and receive this edge and clarity over the charts, check out the link down below in the description to the Discord. And by joining, you'll become part of a growing community of investors, all looking to learn and grow together. So our Apple bot turned out to be the home run of the day, and our Apple bot sent out a bull indicator since 9:35 a.m. And from that moment forward, as you see in the chart, the inflows crossed the midpoint to the upside with full strength on 42 vision, and call options went up 200% plus within an hour, guys. If you guys want to receive this clarity and edge over the charts and know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. We look forward to having you join us, and we strive for opportunities like these every single day. So here we are with the SPY, the S&P 500 index, and as you see it here based off 42 vision, we've gone from a dip area into a rip area here within just 1 day's transition. Things came back down, and I stated it looked like it was slowing down here. If it found support and bounced off of it, we would go higher. And here we are 2 days back to back, right? The last 2 days actually going ahead and hitting rip areas. After today's pullback, we no longer see bright green, right? And we need to talk about what's going on here, because it seems like this run is starting to slow down, or this could be the setup here in this pullback for the next bull run, right? And we need to talk about what's going on here with the bull and bear indicators and the inflow versus outflow, which you can now gain access to as well. The link is down below in the description to the 42 vision indicator, getting connected to our bots, as well as becoming part of a growing community of investors, all looking to learn and grow together by using these resources to maximize in either direction, whether stocks are going up or going down within the volatility. And in today's video, I'm going to pull up the inflow versus outflow, which adds that extra layer of confirmation and gives us that edge within the volatility's charts. So here we are with the SPY under a bear indicator, and outflows crossed around the middle of the day, guys. And now we're trying to come back up here as if somebody's buying up that dip, and it's going to be crucial for this to cross over, right? In yesterday's video, we talked about how we were below the midpoint and we wanted these inflows to come back up. Certainly happened in the after hours, but in the pre-market, it did not cross to the downside, but outflow started to pick up there. You could see that pullback, and it's the one thing that held up the stock market for about an hour after the bell. And then it turned out to be a big fake out that got destroyed. That bear indicator still was in play, and once those outflows crossed, we started dropping. We broke the low of the day, and we went to newer lows. Now we're trying to bounce off that area while the SPY's at critical levels. Before, 368, 367 was a critical resistance level, and now it's trying to be used as support. And tomorrow's data points is going to be crucial to either make or break the sustainability of this run here in the last several days, and if it could stay going in this uptrend. A lot of people think that for the next several weeks, days, we're going to continue this uptrend. This is going to be easy peasy, but volatility, in my opinion, is here to stay. And within the volatility, having a clarity and edge makes all the difference, and being up to date with data points and what they imply, not based off what it will do to the markets, but what it makes the Fed want to do, which then actually affects the markets. That's how crazy it is right now with the volatility in the markets, the S&P 500 and the SPY. And it's crucial to have that edge to see where the inflows are and where the money's flowing, right? Is there more inflows or are there more outflows? It's going to be critical. So on the 30-minute, we see a lot more volatility, right? Like things crossed back up yesterday. We're back below. We're trying to get back towards the midpoint, which is crucial going into tomorrow. But when you go to the 1 hour here, you could see that the outflows crossed since yesterday, and then it briefly crossed in the early on pre-market hours. And what happened? Well, it crossed right over, and it's been below it all day. Right now, it's super close to the midpoint. It is green. Inflows are coming up, but it's going to be crucial for this to cross over, stay above it, and pull away from that midpoint going into tomorrow, guys. This is crucial after tomorrow's data point. And right now, we just got on the 1 hour, our first bear indicator since the bull indicator back here on October 17th from around 361, and we ran all the way to 375. And right now, even things are coming back up. We need a bull indicator to cancel this bear indicator. If not, within the volatility, and if these outflows stay below the midpoint and they dominate, this bear indicator is dominating over the chart no matter which direction things are moving, especially if those outflows reject and pull down even lower on the 1 hour. Now, in this volatility as well as the markets going higher, a lot of people are questioning, was 348 back here on October 13th the bottom, right? And we have a lot of analysis ratings coming out, and I've shown this to you guys before based off the history of the chart and what's going on with the lagging indicators. Today I'm going to show it to you with 42 vision in the inflow versus outflow. But here's another article here, and you have it here with Interactive Brokers Thomas, right? He goes ahead and says S&P 500 may bottom around 3,000, right? And everyone is targeting towards that area between 2,900 to 3,200. I've shown you guys exactly how it is that they're getting this 3,000 number. And then you also have here the article, how they switch the names of the articles. That's actually kind of scary. I don't know why they do that in such a short period of time, but it's no longer called, right, that Interactive Brokers Thomas, right, may bottom at around 3,000. If not, it says stock market sell-off may mean another 20% drop, S&P 500 by Wall Street veteran. They don't even say his name here, but it's super important to realize it's the same guy here. You see it right there, Thomas from Interactive Brokers. And he states that I generally believe that rates are going to continue to go higher and inflation is not going to come down as much as expected, creating that volatility to bottom at a level of around 3,000. And this is big. Why? Because the markets are going higher right now and everyone's pointing down towards that area. If we go ahead and go to the 1 week here, you could see that we've been under a bear indicator since way back here at 456. It rejected that same area between February, January area into March, and things pulled down to the recent lows of June, pulled back up. This bull indicator turned out to be a fake out as inflows slowed down. They rejected and switched to red, crossed that midpoint, and soon after another bear indicator. And here we are retesting the lows and even hitting newer lows, and outflows still have not slowed down. And based off the history of the chart from June's outflows, we hit lows here of minus 62. We're currently at minus 42. And on 2020 crash, we were at minus 89 to minus 90. Something to keep in mind as well. Now, when you zoom out to the even bigger picture and you go to the 1 month here, you could see that the outflows broke back here in June. That bear indicator popped up. This turned out to be a fake out. We're continuing the downtrend here. And based off the history of the chart, we have to go all the way back to 2000 to 2007 bubbles and crashes to see how low things went. We broke through minus 30, which we actually had there as a support on the outflows. The next lowest point is minus 47, and the lowest that we've seen was back in 2008, 2007. 09, and that was minus 73. We're currently at minus 42, and we need to watch and see where this decides to level off or switch back up to green, because once it does, things have slightly started to try to bring itself back up. Now, there was a few fake outs back in 2000. So far, it's been a red straight shot of outflows, no fake outs just yet. And if it continues to play out like 2008, it has more way to go before it finds a slowdown or capitulation or slight bottom. And another thing as well is the Y with red borders, which is what we call the dip areas, have not been hit just yet, right? You could see it there in the 2000, 2007. We have not hit that just yet here, but we are pulling back pretty quickly. And within the volatility, we want to be aware of these things as it continues to play out. So in the zoomed out picture, this is where they're getting these levels from. And as you see it here, you have the supports of 32 up here, and then you have the support of about 290 to 3,000 right around this area where things started to pick up and try to get strength after 2020 crash and coming back up where it slowed down. And that's something to keep in mind. And it's near the area where the inflow started to pick up back in May of 2020 based off the inflow versus outflow. That's another interesting fact to keep in mind. So going into tomorrow, the first thing is the support here, 365. If that gets broken through, the next support is down here at 362, and below that is 360. And to the upside, we want to break back above 372 and then 375. And if that's accomplished, then we can start talking about 380. I'm going to be watching if bull indicators pop up to cancel that bear indicator, and if these inflows can pick up on the 30-minute, the 15-minute with strength, and the 1 hour as well. As always, thank you guys so much for watching, and let's make some money.